All right, Eel Nerds, episode 137. I call this the home stretch to the election, and I'm incorporating some investment ideas, and I wanted to share those with you. Well, I have some big news to report. Check this out. Our channel was started on September 5th, 2022, 2 years ago to the date. And if someone told me 371 people would be tuned in, I would never have believed it. I did this for my own education. If you're new, please check out the playlist. And please remember, I was new to fixed income, as some of you may be even today. And this is my education that I'm sharing. I may be wrong. I have no magical powers of prediction. So please do your own homework. Well, let's check the market temperature as part of this episode. We do that all the time. I review my portfolio, how it performs compared to the rest of the market. And I have my thesis on the divergent paths from where we are. And based on that, I've created some investment themes and I'm going to share my trades. Well, as some of you may know, I'm more of a steady Eddie. The last 3 months have given me about 1.7%, that is after taxes and after my expenses, and it is state tax free, just to be clear. And the market, in the meanwhile, has gone on a nice little wave ride. That's the NASDAQ. So if some of you were hoping to have some growth, you got none of that in the last 3 months. And if you're looking for dividends, NASDAQ is not the place to look. So the income portfolio in the last 3 months was a home run. Now, obviously, if you go to a longer and longer period, I have trailed the markets, but I sleep very well. I don't worry about what's going to happen to my portfolio tomorrow, precisely because of my asset allocation. The market, in the meanwhile, does ups and downs on days like today. So if you're too much into equities, that does cause some consternation. Speaking of too much or too little into equities, here is where I was just about 4 months ago, barely a 0.5% into equities, and I've kind of gently started moving farther and farther. I'm now into 1.5%, and I keep waiting for the right moment to get in big into equities. Until then, I am predominantly in fixed income. And as you can see, my treasury allocation is extraordinarily high, and I keep a small amount of preferred stocks, some amount of investment grade corporate bonds, but other than that, I am mostly in treasuries and getting into equities right now. In terms of duration, I am very, very short term, as I do anticipate some volatility, and I want to take advantage of that volatility in the next couple, 3 months. And I increase duration, but not to a great extent. So I have a small amount of my portfolio in longer duration. So as the big bag of money starts coming towards the home plate, and the umpire might be a little bit out of position here, sorry about that, Dolly. What do we do now? Well, before I share my thoughts about where the market is headed, I want to make sure you know that I am not a wealth management advisor. This is not investment advice or tax advice. I don't do product or politics, and I'm not pitching any snake oil. So there's a lot of talk about soft landing. What does soft landing mean? In general, it's a balance with the idea that inflation gets to 2%. 2% is not a specific number. It might be relative. It might be pretty close to 2%. 2.5% may be called 2%. It doesn't matter. Inflation is not a big pull on real GDP, as it is called. Unemployment is very low. GDP goes up. And some would argue we have all three of those happening right now and some level of world stability. And that would be the soft landing. Chairman Powell can claim, I brought it for you. Now, from here on, that may continue, which will be a Cinderella story, or we may have some level of higher unemployment. And I don't know if 8% is a big number or a small number, but it's well over 5%. If unemployment is high, the idea that GDP will still be going up would need some kind of a magic hand. So I doubt if even one of the levers, if unemployment alone goes up, it's unlikely that the other two will be under control. So that is one possibility. That's a divergent path, as I say, but it's unlikely. The other possibility is inflation comes back. Now, if inflation comes back and everybody gets paid more, you could have low unemployment and you could have increasing GDP. However, this is the term of real GDP versus nominal GDP. Imagine if everybody's salaries doubled and the price of coffee tripled. That would be that scenario. Inflation grows faster than the growth of the country, and that's not a good thing at the end of the day. We can pretend it's good in the short term, but it will bite. And we're again making the assumption that, whether it is unemployment that gives or whether it is inflation that gives in these divergent paths, we are assuming that peace and stability in the world still remains. There isn't a major war. Now, the last possibility or the last couple of possibilities is inflation continues and GDP does not go up. It almost is irrelevant as to what happens to unemployment. That would be the magical stagflation, which isn't good for us. And last but not the least, a black swan event. Something that nobody anticipates, kind of like a COVID, maybe something else. And if something like that happens, the market will have a lot of volatility. And so I'm going to share with you what I believe my probabilities are for each of these, and please make sure you apply your own judgment to it. I would give the soft landing Cinderella story only a third of the chance. I want it to happen for the country, but it just instinct tells me that's not the most likely scenario. Now, could it be possible that all of a sudden inflation runs away? Maybe I give it again the same kind of chance as a soft landing. Now, the idea that inflation is going to be tame, we're going to have huge unemployment, but GDP is going to go up, that kind of is magic and voodoo to me. I just don't see how that is going to happen. The more likely possibility is around, stagflation, unfortunately. That's a real possibility. And unfortunately, we are headed into a very tough election. And without speaking politics, who knows what will happen the day after the election. So my sense is, if you were to look at the net probability of all things put together, the odds of a perfect event here in terms of having no disturbance is very low. And so my instinct tells me reality is going to be closer to this, where the odds of a soft landing after the election are going to decrease. The odds of inflation is going to increase. And what that means is growth equities. If I were to try and consider a growth equity, kind of like the, tech stock type things, I would not do it before the election. This is just me. Now, having said that, the magical world where GDP goes up is also something I don't believe in if unemployment goes up. So again, another growth equity indicator to me is not flashing bright green. What is flashing in terms of, hey, we better make sure that we are prepared for it, is the return of inflation. And the return of inflation would mean government spending. It would mean we are unable to get our tax revenues. So things like that would cause the consumer staples prices to go up. We will need to go back to fixed income. And so that is where my mind goes to kind of thinking through consumer staples and fixed income. If we go to stagflation, yet again, we will have to go to consumer staples, defensive stocks, real assets, and the black swan event will create a rush towards safety. So just stepping back, my instinct tells me to just stay on consumer staples and fixed income between now and the election. Watch what happens after the election. And if there is an opportunity, then buy growth equities. Otherwise, don't jump there. That is what my instinct tells me. So, what does that do in terms of my investment themes? I am going to go from 1.5% to kind of sort of 15%. I don't believe in these perfect numbers. I will keep buying boring stocks like, lime, eggs, and so on. And I do believe when inflation does come back, and if it does come back, we're going to see inflation in energy. And so I have stocks like TK Tankers, those are the inflation play. And then here and there, I look for what I would call boring growth stocks. these are stocks that have potential but are still in the defensive industries. The rest, I'm probably still going to park in fixed income, still in low duration. And if there is no stagflation after the election, I will extend duration. Otherwise, I'm just going to stay low. So what does that mean? And the wonderful portfolio checkup in Schwab yells at me all the time. It says, go diversify across sectors, and I do not do it. I am strongly in consumer staples, energy, and healthcare, and lime shows up in materials, but that is where I am. I don't own any of the other sectors. So, in terms of my own trades, here is how they come down. I did buy more Intuitive Surgical, which is a healthcare growth stock, and it's also on the defensive industry. Calmaine, again, a boring food stock. Lime, and there are a couple of new stocks that I did buy. One is Lifeway. They make a healthy yogurt type deal with a prebiotic or a probiotic, as they call it. They posted really good growth numbers. And I also bought another robotic surgery stock, which is called Procept Biorobotics. It has to do with urological procedures, and it appears to be getting a good review in the market. And so I'm going towards healthcare, food, and energy in terms of my new equity buys. As far as sells, I do have some of those as well. As you can see, I keep buying this. These are all trades in the last week. I've been actively buying, and ITCI is another behavioral health drug. Lime, more of Lifeway. I did sell my RCAT holdings in its entirety, and I might go back in later, but as of now, I just decided to get out of it and cash in on the profits. And in the healthcare side, I had Tenet Healthcare. The numbers just seemed too good to be true, and I got a little bit worried, so I sold Tenet Healthcare. And so, aside from that, the rest are all very simple things. I'm playing in my main lane: pharma, energy, and food. So, where is my portfolio? Well, it is pretty much in pharma, preferred stocks, food, and so on. And because I sold off Arcat and Tenet, those were the ones that were up 100% and 30%. My net is a negative number, but that's a little bit misinformed only because I sold off the ones that were at the top of the line. Having said that, I'm going to continue to diversify, continue to learn. Thank you for watching this channel and look forward to learning from you. I have two new equities, Lifeway and Procept Biorobotics, and I'm here to learn with you. Thank you for watching Yield Nerd.